Welcome back to the show. Today's episode is going to open your eyes, and possibly your portfolio. Because while everyone's talking about small price swings, something way bigger is unfolding underneath the surface. So here's the agenda for today. A full crypto market price roundup. Bitcoin ETF outflows versus MicroStrategy's monster buy. Ethereum's growing dominance in tokenized real-world assets. XRP's role in global payments and retirement wealth. CFTC greenlighting spot trading and its long-term impact. Solana, Stellar, Cardano, and Dogecoin updates. What stablecoin activity is telling us about liquidity? Bitcoin versus Ethereum dominance shift. Layer 2 networks and the rise of Base. XRP long-term retirement case study. How close we are to a $10 trillion market and who's ready to ride it. Let's kick off with prices. Bitcoin is holding $114,400. Ethereum sits at $3,627. XRP is $3.03. Solana remains at $180. Dogecoin is at $0.22. Stellar, XLM, is $0.42. Avalanche is holding at $24.75. Tron is at $0.13. Chainlink sits around $17.82. Polkadot is hovering at $6.48. Cardano is at 78 cents. VeChain is 34 cents. Cosmos trades at $8.56. Toncoin is at $7.12. Despite short-term chop, we're seeing a broader pattern emerge. Strength beneath surface volatility. Let's break it down. Starting with Bitcoin. Bitcoin ETFs saw $47 million in outflows this week, which at first glance might seem bearish. But the reality is more nuanced. Michael Saylor's MicroStrategy added another 11,900 BTC, bringing their total holdings to over 250,000 BTC. That's over 1.2% of the total 21 million supply. Why does that matter? Because when one of the most crypto-bullish companies on Earth keeps buying even while ETFs cool off, it signals long-term conviction. Let's compare this to ETF activity. These products are still relatively new and mainly cater to US investors. Meanwhile, sovereign wealth funds, family offices, and institutional desks in Asia and Europe are still positioning OTC or via private channels. This means ETF flows are no longer the single strongest metric for institutional interest. The smarter metric now? Custodial growth. And that's still climbing. Bitcoin dominance currently sits around 52.6%, but what's interesting is Ethereum's creeping rise. Ethereum dominance has climbed to 17.4%, its highest since mid-2023. That shift isn't retail-driven. It's capital reallocation by funds expecting real-world asset adoption to ramp up. Franklin Templeton now has over $350 million of tokenized treasuries running on Ethereum rails. Ondo Finance, backed by major US institutions, just passed 400 million TVL, with projected growth of 300% by Q4. It's now actively onboarding over 100 institutions globally. More surprising? Even BlackRock's Larry Fink praised Ethereum's programmability. That's not a small endorsement. When the largest asset manager on the planet calls your protocol a backbone for financial digitization, you're playing in a different league. There are also over 31 million Ethereum staked, more than 25% of total supply. It's out of circulation, tightening liquidity. Combined with upcoming upgrades like EIP 4844, which will make Ethereum dramatically cheaper and faster to use, the next phase of scaling is coming fast. Ethereum isn't just competing with Bitcoin, it's building a different kind of empire. Let's talk XRP. XRP isn't just up this week, it's shifting into a new gear. Whales are waking up. Wallets holding 100,000 to 1 million XRP have increased by 19% in 30 days. These are strategic players accumulating before the crowd catches on. The reason? Real-world traction. RippleNet is now powering over 70% of Latin America's top payment corridors. Cross-border volume from South Asia to LATAM has surged 38% year-to-date. New deals in Africa and Europe are being signed quietly, and Ripple's partnership with the Republic of Palau to test CBDC infrastructure is moving into Phase 2. But let's zoom out. Imagine XRP reaching just $8 in the next bull run. A holder with 20,000 XRP today, worth about $60,000, would be sitting on $160,000 profit. But that's just appreciation. What if that XRP were moved into staking, liquidity provision, or even tokenized real estate platforms that reward utility token holders? The retirement dream isn't a fantasy. It's now a strategy. More investors are asking, how much XRP would I need for a $3,000 per month payout by 2030? With staking protocols yielding 6 to 12%, that number is far more achievable than people think. Especially if XRP regains and surpasses its former all-time high of $3.84 and then pushes into double digits. Cardano too is showing subtle strength. The new institutional wallet standard has been adopted by 3 European fintech firms. DeFi TVL is up 22% in the last 30 days, and Charles Hoskinson has teased major updates to the Hydra scaling roadmap, which could allow hundreds of thousands of transactions per second at near zero cost. It's slow and steady, but powerful. Now let's talk about regulation. The CFTC's approval of spot crypto trading isn't just a legal detail, it's a game changer. For the first time, US institutions can purchase actual crypto, not just futures, on regulated exchanges. That opens the floodgates. It's not just Bitcoin. Ethereum, Solana, and even newer contenders like Avalanche are now accessible to fund managers under proper compliance. Expect announcements in Q3 from major custodians and broker-dealers integrating with these platforms. Let's touch on Solana next. Solana Pay is going mainstream. Retailers in Miami and LA are accepting Solana in-store. The network is processing over 40 million transactions a day, making it the highest throughput chain globally. The Helium mobile integration is scaling, with over 800,000 hotspots pushing data via Solana rails. This isn't just Web3. It's real-world utility at the edge of the network. NFT sales are also rebounding, with top collections up 12 to 17% weekly. The ecosystem isn't dependent on hype. It's being rebuilt on functionality. Stellar is breaking barriers too. A Nigerian app built on Stellar now lets users send stablecoins without a smartphone or Wi-Fi, just using USSD. That unlocks access for over 400 million unbanked adults. In Brazil, a cross-border payment pilot between Stellar and Santander Bank is moving into national rollout. These aren't pilots, they're lifelines. Dogecoin might be quiet, but don't count it out. Tipping activity is rising again on Reddit and Twitter/X. The Dogecoin Foundation is in talks with a US-based fintech for debit card integration. If that lands, Doge could be spendable at over 8 million merchant terminals globally. Now to stablecoins. Tether issued over $1 billion in USDT this week. That's not idle printing. On-chain analysis shows most of that liquidity landed in exchange wallets. It's dry powder. USDC is gaining government trust. Visa expanded its USDC tests to 5 new countries. And MasterCard's pilot with Polygon and USDC has moved into Phase 2. Let's shift to the big picture. Bitcoin versus Ethereum dominance is a key theme now. As Bitcoin holds the narrative of digital gold, Ethereum is quietly absorbing the global financial backend. Ethereum's RWA narrative, staking strength and scaling roadmap, could eventually push its dominance above 20% for the first time since 2018. Bitcoin, however, still holds the security crown. And with sovereign players like El Salvador and growing US mining infrastructure, its base case remains bulletproof. And let's not ignore Layer 2s. Base, Coinbase's Layer 2, now supports over 2 million monthly active users. Transaction costs are under 1 cent. With growing adoption from DeFi protocols and NFT marketplaces, it's becoming a hub for consumer-grade crypto apps. Arbitrum and Optimism are also expanding. Arbitrum's TVL just crossed $2.8 billion, and Optimism has launched its governance token reward system for app developers. The Layer 2 wars are heating up, and the user wins. So what does all this mean? It means the next wave is forming quietly. Institutions are moving behind the scenes. Tokenized assets are finding real demand. XRP is positioning for remittance dominance. Ethereum is becoming finance infrastructure. Bitcoin is locking supply into corporate hands. Solana and Stellar are integrating into daily life. Layer 2s are making it usable. And all of this is setting the stage for the next market expansion. You might not feel the fireworks yet, but that's how smart money wants it. Because by the time it's obvious, it's too late. So here's your edge. Stay alert, stay early, and stay ready. If you enjoyed this episode, hit that follow button on Spotify, share it with a friend, and if you're serious about security, grab your Ledger wallet using the link in the description. We'll see you at the top.